Um, long day. You just don't even want to know. Anyway, inflation numbers are out. So the good news is that we have seen inflation drop from 10.7% to 10.5%. So I want to give a little bit of a look at that and what does it basically mean for you, the consumer, for us as consumers, right? That's the most important thing. So I want to go through some very headline stuff at this point in time, give some thoughts, give some views, and yeah, let's see how we crack on. So look, we know that inflation has been high for some time now. The peak at 11% is what the first time we've seen inflation in double digits since the 1970s, really. So I think it's good news that we can now say that for two consecutive months, inflation has fallen. However, there are some nuances that I think are really, really important here in making sure that we have a good grasp of what's going on and what to potentially expect moving forward as well, because that's really, really important. So when you look at it, let me just bring up my screen right here. So when you look at it right here, what we have here is the inflation report for January. So 10.5%. Now, the reason why we have seen a fall in, let me just get this up very quickly. What am I doing? The reason why we have seen a fall in inflation is because of primarily clothing costs and fuel costs. Those are the two things that have basically driven inflation down. So clothing and fuel. Now, fuel and clothing, you can question whether they are core inflation, the things that we buy more regularly on a day-to-day basis. Fuel, probably yes, because you need to commute to work, right? But the real things that are considered to be core inflation are food, drink. Those things have not fallen. That actually increased 16.8% when you look at it from year to year. And that is a huge increase. So whilst the overarching number on inflation has kind of fallen this month, what we're seeing is that in real terms, and when we say real terms, we mean as in what is the real indication to you, the consumer, right? To me, the consumer. Because whilst they might say that inflation is at 10.5%, for many people it feels a lot more. And it feels a lot more because of the cost of food and drink, right? Because that's the stuff that we're using and buying all of the time. So we know that those are the headline numbers. I think the biggest question here is where should we be and what's going to happen with the Bank of England base rate? Okay. And that's really what I want to get into because we have already done a forecast on the Bank of England base rate. Well, the base rate moving forward, the interest rates moving forward. And we also did a forecast looking at the impact of inflation as well on this, right? So what's going on with this thing? Okay, there we go. So this is inflation numbers at the moment. So UK down here, we're seeing this drop what we just said there. But if we go and have a look at the forecast, right? So let's have a look at the forecast and let's have a look at countries. Just to recap where we are and where we are projected to be by the end of 2023. All right, so this is our forecast right here. Not good reading, GDP growth rate minus 0.04. But the real numbers, well, there's two that we want to pay attention to, is inflation. So actual right now, 10.5%. We need to get this down to 5.4% effectively. So we still have a long way to go. And that's not forgetting that the actual target for inflation set by the Bank of England is 2%. So we are 5 times where we need to be right now, which means there has to be a concerted effort by the Bank of England to try and bring these numbers down and do what is necessary to bring these numbers down whilst they seem to be falling of their own accord as it is. Now, interest rates, interestingly, we're still at 3.5% right now, okay? In Q1, we're projected to be at 4%. We are in Q1 right now, so just bear that in mind. So we're in Q1 right now. The projection for interest rates is 4%. By the end of the year, 5.2% is where we are headed. Now, these are forecast numbers. These numbers have been put out there for everyone to be aware of. So what's going to happen with the Bank of England base rate? That is the big question now. Now, at the last meeting by the Monetary Policy Committee, so they're next going to meet on the 2nd of February. Okay, that's the next meeting. So that's when we're going to know what's going to happen with interest rates at the next meeting and whether we're going to see a 0.5% or a 0.25% interest rate hike with the Bank of England, according to the decision of the MPC. But I do want to cover this because this is really, really interesting. If I can actually just find the section, these are comments from the last Monetary Policy Committee meeting in December. So remember, even though we saw inflation come down from 11.1% to 10.7%, there was still an increase of 0.5% in the Bank of England base rate. Now, it's said here that at the meeting, let me highlight this, at the meeting ended on the 14th of December 2022, the MPC voted by majority of 6-3 to increase the bank rate by half percentage points to 3.5%. That's interesting because what we're seeing here is we're seeing a good number of them that kind of were like, maybe we don't need to push the Bank of England base rate back up. Now, regardless of what we're seeing at the moment in terms of the inflation numbers at this point in time, I think that we are likely going to see another increase to the Bank of England base rate announced on the 2nd of February. The question is going to be by how much? Is it going to be by 0.5%? Is it going to be by 0.25%? I wouldn't be surprised if we see another 0.5% increase, purely because when we go back into the forecast here, we know that the forecast for Q1 is 4%. Having said that, though, when you look at what their future meeting schedule is like, they're going to meet on 2nd of February, and they're also going to meet on the 23rd of March. So they have two more meetings. Well, they got two meetings in Q1. So they may, on the 2nd, say, well, actually, you know what we're going to do is we're going to increase the base rate here by 0.5%. And possibly monitor things, see what happens. 0.25% on the 2nd, and do the same on the 23rd. So we actually get to that forecast of 4%. The honest answer is, look, at the moment, we really don't know. We really don't know what is going to happen. This is kind of guesswork. But I think when you listen to some of the economists and some of the professionals in the space, they're all kind of leaning towards the same kind of assumption, that we're going to see an increase in the Bank of England base rate come February the 2nd. So the big question is this, and this is the one that everyone's going to be interested in, right? What does that actually mean for you? So if we did see the Bank of England base rate increase, what does it mean for everybody, the consumers, ordinary people, day to day, right? What is that going to do to pensions, mortgage rates? What is that going to do to things like savings rates? So let's start with pensions. Obviously, with pensions, if you see an increase in the Bank of England base rate, it can be bad just for purchasing power, that kind of stuff. So I think pensioners will find it a little bit more difficult. But this is where the Monetary Policy Committee, Jeremy Hunt, and Andrew Bailey, they have a really tough job in trying to make a call that will have the least amount of damage, with the bigger picture being taken into consideration. So it won't necessarily be great for pensions when it comes to purchasing power. When it comes to mortgages, well, I was having a conversation with someone this week, actually, and this will be on the podcast in the next 2-3 weeks or so. We were talking about what this might actually do for mortgage rates and for first-time buyers and the like, right? And the simple fact is this, look, there is a lot of money available for the banks to lend in mortgages right now. There's actually quite a lot of liquid cash available. The trouble is, with inflation and the bank rate going up, for people who will take out these mortgages, it all of a sudden becomes really, really expensive to get a mortgage. And that can deter people from actually trying to take out a mortgage to get on the property ladder, because things become more expensive. But on the converse to that as well, the banks need to lend the money because that is what helps with GDP and the economy, right? So it's a catch-22. There's lots of money there. The government wants the banks to lend money, but we're seeing interest rates increase, making it more expensive for borrowers to actually get money. And so that leads us into a really difficult position and kind of like a rock and a hard place. Do the banks keep rates low with the view that all of this cash that we've got liquid right now that we should be lending, we're not lending, we're paying a rate for it? Do we keep the rates low and try to encourage people to take out mortgages, buy property, so on and so forth? Obviously, there's a lot going on that we haven't even spoken about, and is another conversation when it comes to property prices and what mortgage rates do to property prices. But all that aside, this is the equation. This is the complex equation that we're looking at. Now, I don't know or not whether if the Bank of England base rate goes up on the 2nd, we're going to see a mortgage rate increase as a result of that. The last time this happened in December, we actually saw mortgage rates go down. Now, bearing in mind, when we go back to the forecast right here, yeah? I need to get this right. What's going on? There we go. When we go back to the forecast here, where is it? Right here. We know that interest rates are forecast to be at 5.2. So there's a large element from a lender's point of view to have already priced in this into the mortgage rate predictions. But we just don't know. We don't know for sure. And this is going to be the guesswork. So for someone who may be in a position where, like me, mortgages, the fixed rate mortgages coming to an end later on this year, what are the things you should be doing? Look, I think that you should still 100% be speaking to a mortgage broker, seeing what they have to say. If you're a first-time buyer trying to get on the property ladder, still looking, watching the market, because we don't know what's going to happen. We could roll around to 2nd of February, into the bank rate goes up by 0.25%. We might see mortgage rates go down to compensate. We don't know just yet, but I think it's worthwhile being prepared and keeping your ear to the ground. What about savings? So savings, oh, Jesus Christ. If you haven't watched the video yesterday, go watch the video yesterday. I teamed up with Chip. They have a 3% instant access account. There were a couple of things that I was like, okay, this isn't ideal, but they're actually fixing that now. So they're actually giving you a 3% on instant access. It's the highest instant access account. And some people in the comments have mentioned that Vanguard have got one, and I think Moneybox have got one as well. So check those out as well. But check out the Chip account. Instant access, it will compound. And I provided a graph in that video which basically talked about, based on your deposits, how much you can get per month. It's not to be sniffed at, particularly in this area. So interest rates, will we see interest rates increase on the high street if we see a 0.25% increase with the Bank of England? I don't have that much faith, if I'm completely honest, because at the end of the day, the banks are in this position at the moment where they're trying to, it's all about profitability, and it's edging that profitability. And yes, they should just pass this on, but we've come to expect that they don't. They will certainly increase variable rate mortgages 100% because it's going to make them a load of money. But when it comes to passing those savings onto account holders, I'm not going to hold my breath. The Chip account seems a little bit different because speaking to the guys, they were like, listen, we just want to make an account where we can be nimble enough to pass on those interest rate hikes as and when they basically happen. So it could be a really good account. But if you haven't seen the video yesterday, go check that out for your interest. But this is a situation that we find ourselves in, really. It is good news that inflation has fallen. But like I've said, it's only falling because of clothes and fuel. The stuff that hits us every day, food, drink, which is where most people are going to feel the pinch, especially if you've got a large family. I mean, like, it's really expensive right now. It really, really, really is. And we haven't even spoken about energy prices, right? Like, it's a lot. It's a lot. And we know that the energy price cap is going to go up from 2,500 to 3,000 in April. And we know that it is forecast at this point in time that in July it's going to drop down to 2,400 and back up to 2,500 in October. So we're going to see a bit of a reduction. But month to month, it's difficult. It really, really is. And so it's a great headline. Inflation has fallen for 2 months in a row. But I fear that real people day to day aren't necessarily going to feel, they're not going to feel that in their own pockets because food and drink is still increasing in price. And the pinch and the squeeze is still very much a thing. So look, let me know what you think in the comments to this. Do you think the Bank of England will increase rates, or do you think they will hold fire? There is a camp that think that they will hold fire. I just don't think they will. I think that they need to be seen to do something. I think they have to take action. Who knows? But let me know in the comments. I appreciate every single one of you. And again, look, I'm going to shout this out because at the end of the day, this is the first time I've done something like this. And look, my book is going to be available. It's now actually available for pre-order on Amazon. It is also going to be an audio book as well, so you can listen to me narrate the book. It's going to be great. It's called The Money Basics: How to Become Your Own Financial Hero. I will leave a link to that in the description down below. But appreciate every single one of you. I'm just browsing through the comments right now. Um, Kevin's asking, can I check out Abu Dhabi? Can anyone else picture Pete delaying the start of this to fix his hair? You know what? My hair is a mess right now. It really, really is. Literally, as I finish this, I've got to jump in a car and I've got to drive all the way to Leeds because I've got Channel 4 tomorrow. And normally I stay overnight because my call time is like 9 o'clock. Then we go through the whole show sequencing and all that kind of stuff. And yeah, so literally, today has been mad. It's been bonkers. My car is probably going to be written off today. The assessor came today, so I've been to Tesla because I'm looking into another car. I've got that outside right now. Sharon at Tesla, you probably watch this. She put me in a performance Model Y, which is quick. Uh, you know what it's like, right? They try to bait you with the top model. So by the time you come back and you give it back, you're like, I kind of want this model. I kind of feel like that. I'm falling for it right now, but I'm going to try and keep my head and be sensible with it. But yeah, it looks like I'm going to have to switch my car out. Unfortunately, if it gets written off, which is slightly annoying because it means cash that I've got set aside, I've got to plow into a car. I don't necessarily want to finance it. And this is where, you talk about personal finance being you're making personal decisions. Do I finance it via my business? But there are things coming later on this year that might end up costing me more money. So do I use cash that's available? I've got a really big decision to make on that front, unless they don't write off the car. But who knows? Meji, hi, how you doing? I thank you so much for your pre-order. I really do appreciate you. Thank you so much. Yeah, guys, look, thank you for watching this. I'm going to clock off and get up to Leeds. And I will see you, maybe not tomorrow evening, but certainly, I think, actually, I'm in London on Friday. So probably over the weekend, I'll do a live session. Thank you so much. Have a good evening. Hope you found value in this. If you did, make sure you smash the like button.